Hello, Emma. How's it going?
All right, Gary, thank you for having me.
Hey, you know what? This is what I read last week. This is a headline for a news in Microsoft. It says the housing market is at rock bottom, says Redfin CEO Glenn Kelman. Rock
Wow.
bottom, which means
Yeah.
that if history itself serves like as example, then prices can go double in the next 10 years, 10 to 15 years. So whatever your house is worth right now, let's say it's worth 750,000, which is the average price in LA. In 10 years time, it could be worth 1.5 million.
Wow. Okay.
Let that sink in.
And the I would say the sentiment, the people's feelings, the collective feeling, Gary, is
Mhm.
people are saying that the prices are high.
Yeah.
And
Before you continue,
uh-huh.
do you know that right now prices are at record high? Never in the history of the housing market has prices been this high. This is the highest they've been. If this is a stock market, this is like the highest. And as we all know, everything that goes up has to go down. But according to
Right.
this article, and according to this Redfin CEO, this is a rock bottom. Like this is the cheapest. How is that possible? It sounds like a contradiction.
Right. And and this is what I'm thinking, right? I'm still involved in listing and selling properties very much.
Uh-huh.
And the thinking is that the prices are high. So then now, and Redfin is one of the, I would say, top internet companies. So they have the data, like you were saying. Excuse me, I have
Yeah, they
allergies.
collect data. They are in the business of data distribution and data selling. They have to
Uh-huh.
know something.
They do. So then I think it's going to be how can I say this to you, to the public, right? To our to the buyers and the sellers, uh a hard pill to swallow. If they're high now, imagine what's in 2025, 2026. And it's I think it's important to know that a normal real estate market is between 5 to 5.5 sales in
Uh-huh.
nationwide, right? We
Five to
sell
five.
between,
Okay.
yeah. So we sell 5 million a year.
How many? Can you repeat that? You froze.
Sure. Between 5.5 sales in the year.
Mm-hmm.
That's a normal market, right?
Mm-hmm.
And 2023, we did 3.75.
So from 5.9 to 3.75. Okay. So we're
Yes.
sure. Mm-hmm.
We're short, yes.
Mm-hmm.
And people's the shortage is because we have low inventory, high interest rate, and high in low inventory, I should say, right?
Yeah.
So then now in 2024, we'll do 4.1, 4.2. So we're on our way there. So then
Getting better.
when when the prices begin to go up next year, right? I mean, when the prices become, I would say, higher than what they are now, I wonder what's going to happen to the demand.
The demand is strong right now. We are seeing multiple offers and biddings on market value properties starting up again. Something that we thought we wasn't going to happen because of a high interest environment, but people are used to this high interest environment already. So they're okay. This is the new normal. So they're going to buy a
Yes.
house.
Mhm.
Yeah.
So I think it's going to be there's the word that we use, acclimate.
Yeah.
You know, people become acclimated, like they have become acclimated with the interest rates.
Mm-hmm.
Now it's just simply the pricing, right?
Yeah.
I've been involved in real estate since the early 1990s, and I remember how between 1990 1995 prices were depressed in California.
Mm-hmm.
But between 1995 and 1999, prices went up.
Mm-hmm.
And it took some time before people said, hey, well, we're not going to pay 115 for a two-bedroom, one bath. It's going to go to 175.
Yeah.
So now we're 700,000. People are going to get used to having the conversation and the prices of, instead of 750, 850.
Yeah.
I think it's going to be interesting to see it. And you know, and it's good to know this, Gary. My daughter and I bought a home 2 years ago,
Mm-hmm.
and it went against my will because I didn't think it was a good time to buy. Right? I told her, no, it's not a good time to buy. And you and I had this conversation,
Yeah. And I say, yes,
right?
it is a good time to buy. I say you should buy.
Yeah, right. Yeah. And we were doing numbers yesterday because we're about to make another move, and we pay like 515, and the market says 675.
Mm-hmm.
Yes,
Right
the
now.
purchase was good. The property, yeah, the property needed work,
Mm-hmm.
right? But that's 30%.
Okay.
So then I think it's really still be a good vehicle to invest in a place where you can raise families, but it's going to uh cost you a little bit more. What's your take on that?
I think that it makes sense that this is the bottom, and I tell you why. How many people? Okay, before I get to that, the average age of buyers is 33. At that age,
Wow.
yeah, the average buyer. So
Okay.
at that age, most likely you're going to get married. Most likely you're going to have kids, and you're going to move from, let's say, your bachelor's apartment, your one bedroom, one bath, into a single family house. Now,
Right.
how many people miss out on buying their first house in the pandemic? A lot.
A lot of people
Yeah,
did.
because they kept waiting. Like, okay, let's wait to see, how this pandemic unravel. But
Uh-huh.
that's like every year there's going to be a couple that's turning 33 or a buyer that's turning 33 every year, and that accumulates. Now let's go back to the recession 2008. How many
Okay.
people actually, after when it kind of got normal in the year 2013, 14, that's when it kind of
Yeah.
got normalized that, hey,
Yes.
we are no longer in recession. How many people actually waited to buy a house because they thought, oh, well, let's see how this unravels? So every year we have people that are waiting to buy a house and never do. And since 2008 till now has been 16 years, 16 or so of years. So
Yeah.
with that idea, it's like the demand is there. It's a strong demand. We have enough demand to cover for the next 10 years based on how many properties are in the market. Like you mentioned that the average sale per year is about 5 million to 5.9, and now we're at 4.25, give or take.
Yeah,
So
we're projected at 4.1. Yes.
yeah, so we're a million properties short. And
Right.
compound that to how many millions of properties were short last year, the year before, the year before. So
Ooh.
that lack of minus 1 million every year, plus the demand for that 1 year, and the amount of people that need houses every year, that means that we are going to be in the seller's market for a foreseeable future. And it's a boiling point, because right now, because we have so many people that need housing and there's not enough, they're going to be willing to pay for whatever is available. Therefore,
Interesting.
yeah,
You know what? Maybe
mhm.
maybe that's where the Redfin CEO, one of the that will be one of the data points that they're looking at, because we have had a shortage of inventory for the last
16 years.
I would say 16 years,
Yeah,
right?
yeah,
Then that is people have been on the fence, buyers have been on the fence, and now they're going to come on the market, and that's going to increase demand. So demand increases, prices go up. So interesting. Yeah.
yeah.
Yes. Yes.
And let's not forget that there are being investors who have been buying houses from the beginning. That this demand of investor hasn't gone away. In fact, they're much more hungry because there's more money in their vaults that they need to spend, that they need to invest it and put somewhere. And there's nowhere safer to place your money than in real estate. My mentor,
Right.
Dash Nguyen, he even said that last year. I remember seeing he teaching and telling us that this is the bottom of real estate. The reason why it's in the bottom, because right now we're the highest interest available. It's at 8% at that time. Imagine if
Right.
they were to drop that even 2 points to from 8 to 6 to 5%. Can you
Wow.
imagine how many people are going to start buying, and the price that is going to incentivize, like if the median price right now is 750,000, the median in LA is going to be 1 million. It's already 1.1 in Orange County. Average price is 1.1 million. Can you just think like this is the average price? So how's the highest? 5 million? Like I saw this article that says that the average price medium in Silicon Valley, which is in San Jose, is $5.5 million. Wow. 3 bedrooms, 2 bath, 1,400 square feet. What 5.5? How like you cannot imagine how is that going to look like in the future? Don't look into the future. Look to other states. Look at Orange County. Look to up north in Silicon Valley. It's a reality. So it's happening. So don't say it's not possible. It's already a reality.
It's already happening. Yes.
Yeah. Oh. Yeah. So don't think that, oh, it's not possible. How is that? How can you fathom that? Just because some people cannot fathom it, because it's not something that you can afford, doesn't mean other people don't have the money. We have so many people who got wealthy during the pandemic that you don't know how much they have that they can afford so many houses. In fact, I was looking at some of the successful realtors, and they got wealthy during the pandemic because they leverage and they work differently. So what I'm saying is, this is a big country. This is a big world. And there's so many of different groups that have and have not. And I guess it's a mindset thing. Like, just because you don't know about it doesn't mean that it doesn't exist.
It's going to be interesting, Gary, to see it unfold. And you're saying it right. Just because you don't think it's possible doesn't mean it's not.
Yeah. Like we're in a situation that it has never happened before, where the prices are the record high, and yet we're in at the rock bottom. How is that possible? Like
it sounds counterintuitive. It sounds but it hasn't happened before, right?
Never. We got to keep in mind, in history, right? This happened before. So
so it's going to be interesting. So in this, either you stand back and watch and wonder what happened, or get into the game and experience it. And more than likely, the data is there, the information is there, prices are going to go up. And you want to lock in your house in expense, this is the time to do it.
Yeah, I don't know what to tell you. People believe that we realtors are just scoundrels trying to score a commission by telling people to sell or buy. Do what you must. We are not here to tell you or dissuade you to do one thing. We're just informing you what's happening and what's reality. What I'm saying is, like, look, just step out of your geographical area and look around. Look other areas. That's it.
Yeah, that's
the data is there. It's open. So
and people wonder LA is expensive, but then if you stop and think about it, I said it. San Francisco area is the most expensive in California. Second, and then LA. It's still affordable.
Yeah. So, Elmer, our time is up. But if people want to get a hold of you, how can they contact you?
Easy, 323-707-6594.
Awesome.
Or email elmer@southeast.net.
Can you repeat the email again? You got cut off.
Sure. elmer@southeastrealty.net.
Awesome. Elmer, talk to you next time.
Thank you for having me, Gary. Thank you.
Bye.